Last week, we finally saw some real selling pressure hit the market that ended on Friday with a big gap down that shook things up, probably forced a lot of traders to rethink their approach to the market, probably cost some people some money. And whenever we get a move like that, it is a signal that something could potentially be changing under the surface and we should pay attention. So in today's prep, what I'm going to do is I'm going to break down what that shift could mean, what key levels I'm watching, and what signs I'm looking for to either stay bullish or maybe rethink my approach and get bearish for a little while, and how I am planning to navigate the volatility that could be ahead of us. Before we jump into the charts, let me remind you to like, subscribe, share this with other people, all that good stuff, because all of that stuff really helps me out as a creator who's trying to make good content that is helpful to other people that are looking to learn in the market and filter the noise. So with all of that said, let's jump into the charts and let's try to get ahead of the next move. Okay, so if we take a look at the S&P 500, you can see that ever since the pause on tariffs was announced, the market has been making a sharp move upward since April. And so I wanted to kind of give us a big picture of things before we zoom into what the charts are currently showing us. And you can see that we had some selling pressure pretty much every day last week. What this looked like practically is that we had a lot of gap ups that then were not able to sustain. So the market would simultaneously make a new high and look like it was going to climb higher, trap a bunch of traders in, and then just sell for the rest of the day, which makes day trading or getting bullish behind anything fairly difficult. Now, specifically on Thursday, we saw this kind of new all-time high that literally just sold all day long. And then Friday, we had a continued move lower where we gapped down and then continued to sell as well. And so this brings a lot of fear into the market. So we need to talk for a minute about what has caused this selling. We'll talk about where we are in the trend and maybe where we could go from here. Okay, so what has caused this selling is a couple of different things. Inflation seems to be potentially ticking up just a little bit. This is causing some fear because what everybody wants is rate cuts. And so there's some fear that, hey, the Fed hasn't cut rates yet. Do they know something? What's going on? On top of that, we have tariff deadlines that are hit, and Trump has been very, very clear so far that he is not going to extend those deadlines. And so if people do not come to the table and talk and get a deal on the table, then those really high inflation numbers that he talked about are, or not inflation numbers, sorry, tariff numbers that he talked about, they're going to go into effect. And so what we had last week was we had a lot of uncertainty in the market, compounded by the fact that our president was talking a lot, okay? And when he starts talking about tariffs and he announced some flat rates of 10 to 15% on nations, some nations even higher than that, that introduces a lot of uncertainty in the market. When do people tend to invest? They tend to invest when there is certainty, when they are certain that they are going to get a good return on their investments. And so what this does is this introduces some uncertainty into the markets, especially considering a lot of the tariff talk from President Trump was fairly, not just fairly tense, it was fairly tough talk. So what you can see here is that this has led to some uncertainty in the market that caused a gap down and some fear in the market. And so let's talk about not only what caused the selling, let's talk about where we are in the trend, okay? So should I automatically, all of a sudden, now that there's some weakness and some uncertainty in the market, should I get bullish? Well, there's a saying that is very popular, and I say all the time, and that is that the trend is your friend until the end. Currently, we are still in an uptrending market. How do I know that? Well, that is characterized by the market putting in higher highs and higher lows in the trend. And as long as each low is higher than the previous low, you have a higher low, and even selling pressure doesn't mean a whole lot. So if you take a look at where we've been kind of on the short-term trend, you can see we have a new high here, and then we have a low put in right here down at 618.05. And then on Thursday, we had our new higher high, and now we are getting some selling pressure here. Now, The reason we want to pay really close attention to what happens next is because we are getting really, really close to that most recent high or low. So basically, the number to watch here is 618.05. And if we stay above that number, then this is just a little pullback in what continues to be a bullish trending market. And we can kind of chalk all of this up to, typical bull market behavior. If we break below that line, we really need to start rethinking our thesis. Does that mean that we all of a sudden are in a bear market and are selling and are in a downtrend? No, because just like an uptrend is characterized by higher highs and higher lows, downtrends are going to have the same thing. And you need more data than just a break of a certain price level to all of a sudden get bearish. But what it should make you do is it should make you start thinking, okay, I don't know what's going to happen next. This market isn't as strong as it once was. And so therefore, I need to be a little more cautious in the way that I approach the market, in the way that I approach investments and stuff like that. And so let's talk about what could potentially happen from here and where we go from here. Well, the first thing I want to address is I want to address this gap down in the market. So most gaps end up getting filled at some point. So this level from where we opened on Friday at 626.30 to this low right here on Thursday of 630.77, there's a real good chance that gap is going to get filled at some point. As a matter of fact, that percentage level is in the 90s. So most gaps get filled. The question is, how quickly is that going to get filled? Now, here's kind of a key thing to think of when you think of gaps. The quicker that gap fills, the stronger the market is. In the same sense, if you get really, really quick continuation from a gap, that also shows signs of strength or weakness. And so you really want to pay attention to the speed of the market from here. Do we just keep going lower and lower and lower? Then that's a sign that the market is very weak, and we want to be careful there. If this gap is filled in the next few days, that is the sign of the opposite, that this is a very, very strong market and people are just buying every single dip in front of them. So what we want to do is we want to take the next few days, let's say between now and Wednesday, and we want to get hints on if this gap starts to get filled during that time period. If it does, that is normal bull market behavior. That dip got bought up, and that's a sign that we could continue climbing from here. If instead, over the next few days, we continue to consolidate and head lower, and by Wednesday, there's no sign that gap is getting filled, well, now it's a different story, because now it's like, okay, this weakness is very, very real and doesn't seem to be going anywhere anytime soon. So we really want to spend the next few days just watching what happens, not making any judgments on this gap, and let's just see if we have a strong market or we have a weak market from here. Is this a gap that's going to begin the next move down, like a breakdown, or is this just a gap that's going to get filled like most gaps get filled in the next few days? Another thing that we want to keep in mind that I try to not read too much into is seasonality. At this point in the year, a lot of hedge funds have gone on vacation. There's a lot of rebalancing of the market that takes place. And typically, some of the weaker months of the year tend to be August and September. And so sometimes you will get a short pullback in the market, what a lot of people consider a healthy pullback in a market that's maybe a little larger than just a few day pullback. But this could be something that lasts a couple of months. And a lot of times when that happens, that market bottom tends to happen sometime in October. If you just look back at the charts over the last couple of years, you can see that this is something that has happened a lot. And so could this potentially be the beginning of a down move that lasts a couple of months? Absolutely. Or this could just be a small dip before we just take off to the next high. Really, we don't know. We need more data to figure that out. But those are just kind of some things to keep in the back of your mind as you're trading. What this looks like practically is if the market is showing weakness, and if I don't know where the market is going to go next, how should I approach the market? Should I approach the market with the same risk that I always approach? No. You're going to want to take smaller position sizes, have less conviction in your trades unless the market has given you a real reason to be bullish in this market. And right now, we don't have a reason to be super bullish in this market. We need to collect more data. And so is that going to stop me from trading? No. What it is going to cause me to do is understand that any trades with some incredible news that look like they're going to go up might be fighting the market. And so therefore, I want to keep that in the back of my mind as I'm trading. Okay, so some key levels to just watch on QQQ. As we said, that low is going to be a break below this low from a few weeks back in mid-July. I'm going to want to watch this gap level here and see what happens. If we start to climb and fill this gap, there's a pretty good chance that that's going to get filled up here to the low of 630.77. So the first level you're going to want to watch is there. Kind of we climb out of this high of 626.34. This is going to be the next resistance level that you're going to want to watch on the chart. And then the next one after that is going to be new all-time highs. So for our investment's sake, we're all hoping that that's the story. The next low to watch is here, and then if that gets broken, we're going to want to watch this gap down here. Okay, so those are the levels on SPY. Let's briefly talk about QQQ, which is telling a very similar story. So I don't want to talk about it too much. Let's just talk about these levels. So the key level that you're going to want to watch here is this recent low of 544.67 or so, somewhere around there. This gap fill right here, if we break below that. To the upside, if we get above this gap down high of 559.02, then we're going to be wanting to watch the support, the next resistance level be here at 563.87, and then new all-time high at 574.63. Those are the kind of key levels that you're going to want to keep on your chart for QQQ. Now, with the kind of market news out of the way, I want to give you one trade idea to look at this week, and I'm talking about ATEC. ATEC. So, AlphaTech, they announced their earnings on after hours on Thursday, and they had really, really, really great news. They beat their earnings estimates. They beat their revenue estimates. Those are two key numbers that I watch in earnings. And they kind of smashed both of those. And then they actually increased their guidance. And so while the rest of the market was selling off on Friday, we had a 30% higher day. So we closed 30% higher than the previous day. So very, very strong candle with a lot of volume, as you can tell, in this market. So my attention going into the next few days is going to be on ATEC. Why is that? Well, what happens when you get an earnings beat and a revenue beat, and then they raise their guidance and say, hey, we think we're going to make even more money? Well, the reason you get so much volume in these names over the next few days is because a few different things. One, funds want to be in them. As a matter of fact, one of the funds, I've got it down here on my chart, Canaccord Genuity, they actually maintained a buy. They said, hey, we think this is a buy, and they've upped the price target to $20. And so you're talking about another like $6 to $7 move higher from here is where they expect it to go. And a lot of times after earnings, you're going to see some other companies come in and raise their price targets, initiate buys and stuff like that. Funds want to be in these names when they're producing good news. One of the reasons is because when their customers call them and they say, hey, I just read about ATEC, am I in them? And they want to be able to say, yeah, we're in them. And so you'll see that. So we see high volume. We see this large gap candle. Let's talk about what I would expect to see happen over the next couple days and how I would go about potentially trading this. One scenario could be we have immediate continuation on Monday. Okay, so if we have some immediate continuation on Monday, I'm going to kind of be watching that opening range to determine kind of the way the market or the way ATEC feels on that day. So we have a lot of volume, we climb higher, and after that opening 15 or 20 minutes, we continue to climb higher. I'm going to look for potential trend day continuation to the upside in the form of a bread and butter breakout trade, which I have videos on this channel that you can watch that will teach you how to trade that. So that's not what the purpose of this video, but I could see some immediate continuation Monday. Or what happens a lot of times when you have such a big move, you have some kind of profit taking that takes place. And now with strength, this doesn't always mean this is going to be a lot of profit taking. It just means, hey, maybe the people that have been in this for a little while, they're going to take an opportunity to take some profits. And so you're going to get kind of some movement sideways where they're not really going to be able to break out higher than that 1389 high. They might even go all the way down to the mid 13 level somewhere, 1275, 13, and we get some pullback over the next few days, some profit taking. And so a few things that I would look for. When it comes to day trading this, I would expect a trend day to the upside sometime in the first couple of days. So like by Wednesday, I would be looking for a potential bread and butter breakout trade to the upside where we get a sign that this wants to continue higher because of that news. This is good news. People are going to want to pour in, and we're going to probably at some point over the next few days, I would assume some buying would take place. That's one scenario. So bread and butter trades are on my radar for the next 2 or 3 days. The other opportunity that we potentially have here is we could start to put in consolidation in a flag pattern where we get maybe a few days of some sideways price action or even some like selling and battling between this 13 level and the high. We could consolidate for a little while in that flag pattern and get a good size pullback. And if that happens, there could be an opportunity here for a swing trade on a decent sized pullback. And so I will be watching for both day trading opportunities the first half of this week, but also I will be watching this for potential swing trading opportunities as well. So that's the main idea that I have for you for this week. Those are my thoughts on the market. If you found this breakdown helpful, and you want some daily trade ideas, you want regular updates in the market, you want more like in-depth education on how to trade, the best way to find that is to join my email newsletter. You'll get practical insights delivered into your inbox several times a week so you can stay prepared no matter what happens next in the market from here, whether we climb or we start to sell for a little bit. The link is below in the description of this video. I will see you inside the Legacy Profits Club. Let's keep building your trading edge together.